Hi friends, I hope you're all doing great. So today in this short video, I'll be quickly trying to explain the important provision that was brought up in the Finance Act 2022 with respect to an updated return. So before going into the topic, let's understand some introduction first. I hope my screen is visible to all of you. Yes. So the government, with the objective of widening the tax base, has been bringing up a lot of amendments in the Income Tax Act with respect to imposing TDS provisions on purchase of goods or TDS provisions on withdrawals of cash exceeding a certain amount. Also on TDS on virtual digital assets that I explained in my previous video. So all these amendments have been brought up with in order to plug in the leakages from the tax system. And but to achieve this objective, it is important that the assessee's trust is gained by providing some relief or reducing the effort and time of the assessees by way of prolonged litigation. So in order to achieve this objective, the government had brought up the Vivad and Vishwas Act 2020 in order to provide an option to the assessees to settle its specified disputes by paying certain amount of tax. And now such an measure that is introduced in the Finance Act 2022 is the updated return. So wherein in the updated return, it provides an opportunity is provided to the assessee to rectify any errors or omission that it has made in filing its return. So let us look at the provisions in brief. Yes, so as already mentioned that it was introduced by the Finance Act 2022, and the relevant provisions are section 139 8A, which provides for the provisions of the return that is to be filed, and you have the ITR form specified, which is ITRU. And also another section 140B has been introduced, providing the computation of tax and the amount of tax that is to be payable, including additional income tax. So now an additional income tax will be need to be paid while filing an updated return. So that is also covered here. So let's look at the first section, which is section 139A. Okay, now who can file an updated return? So any person, whether or not has furnished any return, can file an updated return. So if you have already filed an original, belated or revised return, you can still file an updated return. And even if you have not filed any return, you can still file an updated return. So what is the due date of filing? Now the due date of filing an updated return is 24 months from the end of the relevant assessment year. So from the end of the relevant assessment year, within 24 months, you can file an updated return. So based on these provisions, we can analyze that we can file an updated return now for assessment years commencing from 2020-21 onwards. Because for assessment year 1920, the due date of filing an updated return has already expired. It has expired on 31st March 2022. So accordingly, now an updated return can be filed only for assessment year 2021 and onwards. So I hope this is also clear. Now let us look at some of the exceptions where an updated return cannot be filed. So updated return cannot be filed if it is a return of loss. Okay, so if you're filing a return and that is a return of loss, you cannot file an updated return. Also, an updated return cannot be filed if it has the effect of decreasing the total tax liability determined as per the earlier return filed. So if you filed an earlier return and now you're filing an updated return by reducing your tax liability compared to your earlier return, such return cannot be filed. Also, updated return cannot be filed if it results in a refund or increases the refund. Okay. So if you're filing an updated return, that cannot result in a refund. Also, it cannot increase the refund that you had disclosed compared to your earlier return. So as you can see, updated return is to provide additional tax and not providing a relief as such to the assessee by way of tax. So there is an issue coming up from here, wherein suppose say you had a refund of rupees 1 lakh based on your earlier return. Earlier return, you had a refund of, say, this is an earlier return that you have filed. Now in your updated return, you are claiming a refund of, say, 70,000. So can this be done by way of updated return? Now can this be done? So if you see that you are claiming a refund of 70,000 in your updated return, which is a lesser refund compared to your earlier return. Now can this be done? Prima facie, it cannot be, because it is still resulting in a refund. But you're still offering additional income to tax, right? So accordingly, this should not have an issue, but still can be litigated by tax authorities, and that is an issue that needs to be examined. Also, where proceedings under section 132, 132A and 133A are going on, such as search survey proceedings against the assessee, in that case no updated return can be furnished. But there is an exception here, exception for TDS survey. So if a TDS survey is going on under section 133A subsection 2A, in that case still an updated return can be filed. Also, there are some other exceptions. Let's look at those. Now, updated return cannot be furnished if you have already furnished an updated return for an assessment year. If you have already furnished an updated return, you cannot file another updated return. An updated return can be furnished only once for an assessment year. Also, if there is any assessment, reassessment, revision or recomputation proceedings that are pending or completed for the assessment year, then an updated return cannot be furnished. So if there are any assessment or reassessment proceedings which are pending or have been completed, then updated return cannot be furnished. So if a notice has been issued under section 132, under section 143 subsection 2, then you cannot file an updated return. But there's one question: what if an intimation has been issued under section 143(1)? So if an intimation has been issued under section 143 subsection 1, so can an updated return be furnished? Answer is yes, because intimation under section 143(1) is not an order. The Supreme Court has specified this, and accordingly assessment proceedings have not been initiated, and yes, you can file an updated return. Also, updated return cannot be furnished if AO assessing officer has certain information under various acts. Now these acts refer to the Benami Act, the PMLA Act, also the Black Money and Imposition Act. So under these acts, if the AO has certain information and that has been communicated to the assessee before filing the updated return, then you cannot file an updated return. Also, if you have received the AO has certain information referred to under agreement, referred in the agreement under section 90 to 9090A, that is DTAA, in such cases also you cannot file an updated return. Also, if any prosecution proceedings have been initiated for the relevant assessment year, even in that case updated return cannot be filed. So these were the cases where updated return cannot be filed. Now there are two specific points that have been provided in the Act, which says that if a return of loss is furnished earlier, then an updated return can be filed provided the updated return is a return of income. So if you have filed a return of income earlier, which was a return of loss, and now you want to file an updated return, you can file provided that the return of income, provided that the return is a return of income and not a return of loss. Also, if carry forward losses or carry forward unabsorbed depreciation or MAT is reduced for future years owing to filing an updated return, then an updated return shall also be furnished for each such future year. So this provision says that if your losses or MAT credit or unabsorbed depreciation for the future years has been reduced because you're filing an updated return now and offering additional income to tax, due to this your future losses, depreciation, MAT credit is reducing, then the law says that for such future years also you will have to file an updated return. So this is putting up additional compliance on the assessee if you're filing an updated return. So let's look at now the provisions of section 140B providing the payment of tax. So first we'll look at the normal tax that is to be payable, and then we'll look at some additional income tax that is to be paid. So let's look. So person filing an updated return shall be liable to pay the original tax amount and a certain amount as additional tax, and such return shall be accompanied by the proof of payment of such tax. Only then the return will be treated as valid. Now there can be certain situations, there can be two situations where you're filing an updated return. So let's look at the computation of tax liability in those cases. Now first let us look at where no return of income has been filed. So if no return of income has been filed, then the normal tax that you have to pay shall be paid after considering into account the following items: the credit of advance tax that you have paid, TDS, relief under 189, foreign tax credit, and MAT and AMT credit. So all these amounts have to be considered, and after that whatever is the tax payable coming including interest is the normal tax that you have to pay. This is the similar computation that you normally do. Okay, And let's look at a situation where a return of income has been filed earlier. So where a return of income has already been filed, then the tax payable should be computed after considering all these items. The first item is the amount of taxes that you have claimed as credit in the earlier return, such as advance tax, self-assessment tax also, TDS, etc. So in such cases where a return of income has been filed earlier, only those taxes that you have claimed as credit. It's important to note that you should have claimed the credit of such taxes in your earlier return. Those taxes can be claimed as a credit now while filing an updated return. Apart from this, you can also claim credits on additional income that you've offered. So the income that you have additionally offered in the updated return, the credits with respect to such additional income can be claimed, such as TDS, FTC, MAT, etc. And finally, such amount has to be increased by the amount of refunds that was issued in your earlier return. So if by your earlier return there was some refund issued, now you're filing an updated return, those refunds have to be added back. So after considering all the items, you will have the normal tax that you have to pay, including interest. Further, such amounts has to be increased by any fee. Of course, if you have not filed a return earlier, then fee for late filing will be imposed. But if you have filed a return earlier, original, belated or revised, then no fee shall be levied. And now this amount will be further increased by the additional income tax that you have to pay. So this is an important point. Now additional income tax. Now this additional income tax shall be applied on the aggregate of tax, including surcharge and cess and interest payable. Now this means that the normal tax that you have computed here in this box, you have to compute the tax, add surcharge and cess and also interest, and on that amount you have to compute your additional income tax. So what is the rate of additional income tax? Let us see. This is an important point. Now the rate of additional income tax shall be 25% if the updated return is furnished after the due date of belated or revised return, but before the completion of period of 12 months from the end of the relevant assessment year. And it shall be 50% if the updated return is furnished after the expiry of 12 months, but before the end of the relevant assessment, but before the completion of 24 months from the end of the relevant assessment year. So we know that the due date of filing updated return is 24 months from the end of the relevant assessment year. So if you file an updated return during the last 12 months of the due date of the period of filing an updated return, then your additional income tax rate shall be 50%. But if you file the updated return after the due date of belated or revised return, but before the completion of period of 12 months from the end of the relevant assessment year, you have to file the additional income tax rate would be 25%. So if you want to see an example, say for assessment year 2021-22, now the due date of filing the updated return is 31st March 2024 for assessment year 21-22. Now if you file your updated return by 31st March 2023, then the rate would be 25%. But if you file after this date and before 31st March 2024, your rate would be 50%. So these are the provisions with respect to an updated return. I hope you understood these points. To sum up or to just conclude, I would like to say that the updated return has made additional compliance but has still provided an opportunity to the assessee to avoid penal consequences for not filing of return by way of paying an additional income tax. So but still in this updated return, as we all see, that you cannot claim the genuine errors that you have made, because of which you had paid earlier higher tax earlier, because by way of an updated return you either have to increase your tax liability, correct, and you cannot it cannot result in a return of loss, also it cannot result in a refund. So we'll have to track the acceptance by the assessee of this provision that has come up. But there are certain issues that are arising in this updated return. Now if you see here, when I talk about recomputation, now recomputation refers to recomputation made by the tax authority, correct? So if the tax authority is processing the return of income under section 143(1), then in such a case, it shall not be treated as recomputation, because it is computation by the tax authorities for the first time. That is computation, not recomputation. So processing of return of income is not an assessment, and you can still file an updated return. Also, if you see here, where no return of income has been filed, these credits shall be allowed, but they have not included the credit of self-assessment tax that you pay after the previous year, but before filing the return of income. Suppose you pay self-assessment taxes in installments, then those credits are not allowed here. So that is an issue that needs to be clarified by the department or by the board. We know that the return of updated return cannot be a return of loss, as mentioned here, cannot be a return of loss. But suppose say you have brought forward losses. Such brought forward losses can be set off against the additional income that you have offered. So that is possible, because that is not restricted by the provisions anywhere. So that can still be done. Now, also if you look here, or where a return of income has been filed earlier, these credits are allowed. But suppose you have paid some amount that was arising by way of an intimation under section 143(1). If you have paid some tax and interest, that tax and interest is not allowed as a credit here. So that is also an issue that has to be seen. And apart from that, suppose say there is a liability that is arising in the MAT and AMT by way of filing an updated return, then such MAT or AMT that you have paid can be allowed as a credit to be carried forward for future years. But suppose if you have paid additional income tax on such AMT and MAT, then such additional income tax shall not be allowed to be carried forward. So these were all the issues and the provisions that are there in the updated return. So I hope you understood all of these provisions. If you have any clarifications, as usual, you can put up in the comment box and I shall be happy to resolve them. So that was it from my side for today, and I shall see you next time. So thank you. Take care. Bye bye.